is. Well, we'll see what happens. If nobody joins, I suppose I'll just stop and move on. I knew there was some risk with it being 11:30 in the afternoon on a weekday. I'm guessing a lot of people have to work, and I get that. So whatever. I'll give it a few minutes, see if anybody joins, and then we'll go from there. Maybe I'll blab a bit in case people watch this as a video. Um, or I'll just cancel and move on. 11:30 Monday may be a lousy time without enough warning ahead of time. So either way, I was going to talk a little bit about Boeing and let people know my thoughts on it. I know I talk a lot. I see I at least have one person who joined me. Hello, welcome to the live chat. How's it going, Erwin? At least for now, it's a one-on-one. We'll see if nobody joins. I knew I took a risk on a 11:30 on a Monday that people might be working and not be able to join the video. Plus, I haven't done too many lives, so people aren't really used to it, which is totally cool. But I like the platform. I like the interaction. So it's just one of those things that I kind of want to do more of, but we'll go from there. Oh, interesting. I just got a text from somebody else who said they're watching as well, but it's not showing. So either way, I'll just start rambling about. Oh, interesting, because I put a thing up. Erwin saying he just received the notification now. I put a thing up maybe 2 or 3 hours ago. It's supposed to kind of let people know that there'll be one, but that's okay. Um, Really, one of the things I was going to talk about is the strike with Boeing. They're going to put it to a vote on Wednesday. It looks like the machinists are going to have an option to get, I think they said, a 35% raise over 4 years, which is better than the 25% that Boeing was originally offering. They're also going to contribute to their pensions a little bit more and some other things that's making it a little bit attractive. So they might come to a solution. Um, it's your recordings for your Saturday, Sunday. Can you please repost? Yeah, if I figure out how to chop master, I'm terrible with technology, which is primarily why I just sit in my yard and do my videos. But if I have a way to figure out how to repost them, they should be. If you go to my channel, you should be able to just look under the videos and see them. The Saturday one, I kind of hit it, but the Sunday one is up, which talks about real estate a bit. Um, Either way, right now, and I got my coffee with me too. Um, what I think with Boeing, it had a nice reaction about the strike. We'll see what happens on Wednesday if it actually gets approved and if the machinists actually vote in favor of what's been offered, which should give it another pop. Now, what I like about Boeing, one thing is everybody else hates it. That's part of what I like about it. And they're one of only two companies who build the planes that we fly around in to go visit our family and whatever else. And then 40% of their business is also derived from government contracts, which means they're going to have business for a while. I think once all the negativity is off their shoulders and all the sellers are finally exhausted, it kind of leaves only one direction for the stock to be able to go. It's kind of what I look for, and I've done videos on bad news on good companies. My only concern with Boeing is they haven't proven themselves to be a good company. They've had a lot of mismanagement for a long time, and sometimes, I'm wrong, and it could just have worse and worse problems and continue to go lower. I just feel like Boeing has been so negative for so long that once that cloud gets off of their shoulders, it allows the stock to just start drifting higher and people will stop paying attention. When the bad news stops, nobody will talk about it anymore. If we go back, and I don't even remember how long it was, but when Chipotle was having all of their problems with the tainted food, and then there was, like, I think there was even a story of like one or two of the stores having rodents in it and whatever else, and people talking about, I'm never going to eat it at Chipotle again. Well, people tend to forget things. Our memories are rather short and don't stay the way we think they will today when time passes. Kind of how I feel about Boeing. One person in the comments even said it's different when it comes to airplanes. I don't think so. If they're no longer in the news for negative problems and Nobody's really talking about it. In a year or so, I don't think anybody's going to be paying attention to what plane they're actually getting on when they're booking their tickets and making adjustments because they have concerns. I think what happens is they make their travel plans and go on the plane and sorry, are you guys there? My internet cut in and out. If it keeps doing that, I'll try to reboot it or we'll redo it tomorrow. Um, but the longer they're not in the news, the less people think about it, the better the chance the stock just goes to continues higher. I wonder if there's a way am I able to chat? Doesn't look like it. So that's my thought on Boeing, and I feel like the bad news is out. I don't feel like there's going to be continued worse and worse news. Now, another thing I actually started picking up silver recently too, and I could be wrong on that as well. But I feel like silver with the inflation has been kind of ignored as gold keeps running and running and running. So I'd like to see silver have a nice move to the upside. And if I told you my prediction on it, you'd all think that I'm really nuts. So I'll talk a little about, Goldman was on CNBC this morning, if I remember that was them. And they're talking about for the next 10 years, they only expect the market to go up at approximately a 3% rate. I I have to tell you honestly, as bullish I am the market, and I am, I'm almost on the same page as them. I think maybe it does a little bit better, but I think what's happened is the economy is slowing. The Fed did exactly what they wanted to do. So it's going to be a tough environment for stocks to continue to grow earnings. I think the AI and the analytics and the ability of companies to be able to value stocks has gotten really advanced to where it's ahead of things. And what we'll see is no big correction, no big upswing because it's priced in already. Like anything we can think of, anything that like you and I are aware of, whether it's the wars, whether it's the credit card debt, it all goes into these systems so they're able to price correctly. If the economy slows, it's going to be harder to grow revenue, which is going to be harder to increase earnings. And I think it'll make it a real stock picker's market, which is why I want to buy the things that are discounted when I'm looking to buy things. Um, it doesn't mean you're not going to see the Amazons and everybody else be able to continue to grow, but I do think it's going to be tougher and tougher. Just think of it logically. If the economy's slowing down, and even if that just means that inflation has gone up and we have the same dollars to spend, but they don't quite go as far, you're not going to be able to buy more and more because the buying power is weakening. And when you look globally, that's across the entire globe. So it's not just in the US. So whatever company you are, being able to gain market share and increase those earnings, and if there's pricing power to be able to raise prices, which is really tough because people are already stretched, I just don't see earnings just growing as quickly as some people would expect. But if you can find the stocks that are discounted, well, it shouldn't matter either way. It's not going to impact it because if you're buying it at a discounted price, well, it's already discounted. I don't know if there's stocks that you guys are watching that you think are discounted, but feel free to share the things that you guys like. I mean, I find it, it helps me too when you guys put something up, even if it's a company I've never heard of. I then go and research it and see what I think as well. At the same time, recently, I've been working hard, which not necessarily successful at trying to limit the amount of companies that I actually own. Instead of having a whole bunch of companies with a small amount of money, where I'm actually going with the ones that I think are the strongest and the ones that I like the best and putting more into them. So my goal is to eventually have maybe 20 stocks and that's about it. And really not a whole lot more than that. Have any of you been paying attention to Boeing? Is it something that you're interested in buying? I'd be curious what your thoughts on Boeing is. Another one that I like that actually got downgraded today was UPS, and then Target's having a rough day as well. And I'm feeling like a- anywhere below 150 starts to look attractive to me for Target, because I think when the holidays come around, that Christmas is going to do just fine, and people are going to be surprised with earnings of companies like Target, because people are still going to go out and buy their kids presents. I don't envision where Christmas is just going to be a terrible holiday. Sales are way off, and these companies really struggle. I see it at Costco already, which, is one recently that I decided to follow my own advice. And even though I think the stock is super overvalued, I bought a few shares just to put it in the portfolio because I think it's one of the best companies, and I hate not owning it, even though I think it's super overvalued. It's hard for me to buy it up here because of that. But anyway, my point is they're busy. I see them running through the Christmas items. They tend to bring them in early, and when they sell out, they're gone. And I'm seeing them sell out, and the things are gone. I'm guessing with Target and Walmart and TJX and all the other retailers, and of course that would include Amazon as well, that when the holidays come around, they're going to do just fine. Um, let's see. So 1970 said it first. So he's saying it first. I'm going to watch UPS after earnings on the 24th. If it drops, I'll pick it back up at a 5% dividend. Yeah, that was kind of my attitude on them too. Last earnings, they didn't have such wonderful earnings as well. And along the same lines with like the holiday coming up, my guess is, like I said, I think the holidays are going to be just fine. And you'll see that UPS will have business and deliver packages and continue to be busy. They actually, if I remember correctly, they let go 17,000, if my number's right. I'm trying to do it off memory, employees, which is also going to help their earnings. It's really hard to imagine they let that many people go. They're still able to manage the business that they have, and that the earnings aren't going to start to do better. And I've kind of had the same attitude where that 5% dividend rate is, and I shouldn't get attracted to the dividend. Like, I know better, but it's kind of my gauge too, that when it's above 5%, it looks attractive to me. And when it's below it, I kind of lay off of it. What I did do is I actually sold a put. I sold a put and a call going into the earnings, figuring either way, I'm happy to take the extra, value that's put into that, because earnings are coming out and the volatility goes up, which creates a little bit more v- equity, or whatever you want to think of it as, in the options. So I sold a put with my attitude of, well, if they have bad earnings and I pick up some shares, I'm okay doing that. And then I thought the same thing, and I sold an out of the money call, figuring I'll take the small amount of money and see if it goes up a bunch. And actually today when Boeing was up, so if you guys have watched my other videos and stuff, I have an account that's like, I don't really trade it. I think of it as in a like vault where I don't bother with it. But I also picked up some of the Boeing in a account that I trade. And today, when the stock was up, I sold a 160 call when it was trading 161. I don't know where it is now, and got a lot of premium for that. And I sold an 170 call, figuring that would be great. I was really happy with how it did. Kevin, yes, I still have NVIDIA. Um, I kind of put it a little out of sight because I don't want to watch it too much. I saw this morning it's above 140, um, similar to the others, because I have it in my trading account. I don't have it in the one in the vault, but I do think Nvidia actually, even at the value where it is now, isn't so overstretched. If I were to guess, I didn't look at it this morning. It's probably like high 30s for the forward PE, but at the rate they're still growing, I don't really see that as super expensive. I really like NVIDIA. And I think if you want an AI play, they're the obvious one. And sometimes being in the one that's the most obvious is the one to be in. Instead of searching, I kind of figured, Ken, um, instead of searching for like the needle in the haystack, or the diamond in the rough, or the one that nobody else has thought of, sometimes it's just best to own the one that's right in front of your face. and Nvidia makes the chip that everybody wants. I don't see that changing for some time, even though AMD is working on it and Broadcom probably is too. The Nvidia chip is the one that those companies want, and they have such a head start. And everything I've read and everything I've looked into, they do servicing on it. They even help install it. Like, it's not just selling you the chip, and the margins are like absurd. I want to say they have like 80% margin profit margins in those chips, and too much demand to keep up with getting them out there. Like, what a great problem to have, to see your earnings continuing to grow, to have so much demand that you can't even make your chips fast enough, and having the no competition at this point to creating those chips. So I understand why it's overvalued. I wish I actually had bought more when it fell to 100, but that's easy to say now. If it happens again, maybe I'd be nervous down there. And I think, unlike last earnings, when their earnings come out, if they crush it again, I'm hoping to see it rally from there. Now, that being said, you guys know, like, this is just what works for me. This is not financial advice. You guys need to do your own research. But NVIDIA is a company I really like, and yeah, I'm still holding on to it. I tend to sell puts in case it has a pullback because I'll pick up a little bit more. I don't have too much of it because it makes me nervous because of how far it's gone. But I think back, like, to Tesla years ago, and it ran for a long time before it's kind of slowed down and been more choppy. That was, I just said to a friend recently, like, in terms of what Goldman said, because it was this morning. I feel that way about even Tesla, and they're coming out with earnings, so I might be completely wrong. They may have a huge move, but I feel like they got so overextended. They've now bounced around a bit, and a lot of my thought process comes more from price action than some of the analytics that some of the others do. My background of trading on the floor, it, I pay attention to the bouncing of the ups and downs of how the stock move, and I listen to the news as a narrative as to what's going on. But I'm much more interested to see how a stock behaves. As as Tesla, and it's been a rather large range, has bounced around from like the mid hundreds to the mid 200s. I feel like maybe it continues to have big volatile swings, but stay in that range for a long time until we figure out what they are. Now, I know we know what they are, so I don't want that to sound the wrong way, but are they just a car company? Is the PE multiple too high for what they are? Will they be able to implement the robo taxis, and when they do, what type of revenues and what type of earnings is that going to have? You know, so I have a Tesla, and recently on the screen it popped up that they're going to allow us to use the self-driving capability for free, and normally they charge. Uh, I was talking to my brother about it, and my analysis of why they gave it to us for free is they're falling behind Google and they need to get more data. So they're trying to get more cars to sign up for it so they can start getting the information of the driving to be able to move and get that sped up so they can have cars on the road too. I think it's Google, it might be Amazon, but I think Zoox is driving in San Francisco, and they're also in a couple other states or cities. And Tesla hasn't broken in quite yet. Maybe by giving the self-driving capability out for free, it speeds up their ability, even along with and I don't want this heard the wrong way because I really love Tesla and I think they have a good product, but you also have their charging network and other things, which is why it's hard to know what their earnings will be over time and if they can grow fast enough to justify the multiples that they're at now. So hopefully, with the self-driving, they're able to get it figured out. They're able to get the cars on the road. It's kind of exciting seeing all this technology and all the competition, how it's changing things. But my wacky brain and the way it works, there's some things that I worry about too. A lot of people went and started doing Uber and Lyft and having that for their jobs. because they wanted to work for themselves, and it created an opportunity where they don't have to listen to a boss. As the self-driving expands and grows and these companies can eliminate the employees, I worry like all that displacement, like what actually happens to all those people. Because if you've been working as Uber and Lyft or DoorDash or whatever for the past, I don't know, year, 2 year, 5 years, I mean, they've been around a while, it would be very difficult to go back to a regular job. You've had the freedom of making your own hours. You're your own boss. After you've worked as your own boss, it's very hard to just go back and get a job. So I think a lot of those people are going to be unemployable. Not unemployed, unemployable, because they're going to have difficulty listening to somebody else, or sticking to a schedule, showing up typical 9 o'clock to 5 o'clock and working a job. So I think about it on that spectrum. And as AI gets better and the technology starts to take more and more jobs, like what are we going to do? Like, what's the job of humans as AI gets better? Um, Now, that being said, back to the original point, I still think NVIDIA is a good company. I think it's probably a little stretched on the price, but similar to what I said about Costco, I don't mind owning NVIDIA. I think it's a good company. And if I overpaid, I overpay. It's okay. Um, I, Chopmaster, I can't answer specifically on trades, and I don't mean I can't. It's very hard. Um, if you wanted to keep the stock, you want to keep the stock. I know that it's $10 through the strike, and if it's all the way through December, I'm assuming there's a huge premium on them too. Their volatility is like, I don't know, almost 50, so it's probably pretty expensive. I don't know what I would do in that situation. Um, it's a tough one to be in. And guys, ask tons of questions. That's what I like about the live. I got no issue with them. And I'll be really honest, like if I don't know, I don't know. I like the interaction. I even like when people ask questions on the videos. It's cool. I like this part of the YouTube. Um, will QQQ make new high? Well, eventually they'll make new highs, whether it's sometime soon or in a long or it takes a while. And I actually did a bit of a video, Kevin, on the Qs and SPY, that depending on what a person wants with their portfolio, I love those ETFs. Like if you don't want to pay attention to the markets, I've have thought about why wouldn't I put, and it wouldn't literally be a 50-50 split, but a 50-50 split into SPY and QQQ, or I know some people like, I think it's QQQM because it's got like a point zero 0.05 better um, expense ratio. I think one is like point 0.2 and the other one's 0.15, but it's a bit of a guess. Either way, that gets you really well diversified into the markets, and it's literally like a set it and forget it. And part of what I called the video was, is SPY and QQQ cheating? And what I mean by cheating is they're constantly rotating the top stocks. So you're losing the ones that are weak and falling out of that index, and rotating the ones that are growing fast enough to make it into the index. So you're always having the top companies. When I was talking about it, and my brother loves this stuff too, so we talk about it a lot. We start bouncing ideas. We started thinking, well, if I go back to like the original Dow and look at those companies, even though we still use that index, I want to say like over the past 50 or 60 years, there's barely any of the companies even in the index. It's so hard for me to imagine because a company like Amazon, my brain doesn't see a scenario where they're no longer Amazon, like that somebody's come along and changed the industry and it's no longer a dominant factor. But I don't know, in 50 or 100 years, things do change. New companies come along and they're constantly updating those indices to make sure that the SPY is the top 500 companies. So you're always invested in the top 500. And the QQQs are the 100 NASDAQ companies that are the technology companies. I don't know that you really need much more than that to have a well diversified portfolio. Now, it's not as much fun, so it's really why I don't do it. And then since I enjoy paying attention and watching the prices and everything else. And as dumb as it sounds, when I own a stock, I do feel like I'm an investor and I own that company. Now, it's not like I feel like I can walk into McDonald's and be like, hey, I own this company. Can I get free lunch? But there is some pride in ownership when I pick individual stocks as opposed to just owning the ETFs. But yes, like I'm bullish enough. I think the Qs will probably make new highs. I think that where they're pointing to, like some people calling 6,000 for the S&P, I think that's realistic, even though it sounds pretty high. And even though I think that it's possible that Goldman's accurate, that we're just not going to see the growth, the one thing that I would look out for is that if things melt up, if the stock market really just starts taking off and going straight up. I would give it time and let it play itself out. But I'd almost rather not see that. I would like to see us bounce around because, yeah, inflation sucks. Bills are expensive. Nobody can really afford all the things they used to before. So hopefully they just acclimate to the new economy and kind of, stay within their budgets and slows down and don't push too hard. Hard to do, and I think that's why we see credit card debt going up so much. There'll be some fallout, but when the guy from Bank of America was talking about it, the interesting thing is while all the gloom and doomers are talking about the exorbitant credit card debt and all the default and everything else, he was saying that really things have just gone back more into, you know, typical what he would expect to see and not anything outrageous. I think he said there's like a 3.7% default rate on credit cards, which he's like, if you go back before COVID, that was about standard. And quite honestly, it's still kind of low, even though people are getting nervous about it. Um, Kevin, right now, if I were looking at sectors, other than the media talking about it so much, I love energy because I think what they talk about is accurate. I think that AI takes a lot of energy. I also think that electric vehicles are beginning to draw more energy. And I think as we develop, we kind of suck down as much energy is produced, we'll figure a way to use it. I don't know his name. There's that character who's like a duck or a chicken with the weird voice who is sometime on Tom Lee's his videos where he interviews people, and he's like an energy sector person. I hate watching that chicken, and I think it's kind of silly that he hides himself and he doesn't. Yeah, yeah, yeah. Doomberg. I think it's kind of hard to listen to the chicken, especially because the voice is idiotic. But that was one of the things that he was talking about, and I think if you can get past the voice and the character, he's got good information that if you're watching Google and Amazon and the others start buying up these nuclear facilities, doesn't mean there's going to be some lack of demand for oil or other things because it's just that as much energy is produced, we end up finding a thing we need it for. And yeah, I really like energy right now. I put a tiny, tiny, tiny bet on the nuclear, A, because I know nothing about it. And the company that I bought, it's like I don't know enough to feel comfortable to invest in it. But I think we're so early in that cycle that it really could be one of those things that you get a 10, 20, 30x on. But I'm not really confident enough to invest in it, if that makes sense. But I love the traditional energy. So if you don't know what to pick, an ETF is a great way to do it. I still like stocks, and I try to limit it. The one I gravitate towards Nextera, which is Florida's electric company. Nextera Energy, they also have an offshoot, Nextera Energy Partners, which I talk about from time to time. But I like the electric company because I feel like it's a safer, better bet. I like the other one too because of I'm a bit of a dividend junkie and it pays a super high dividend that I don't know that it'll be able to continue forever, but I like both of them. And then, yeah, I love energy as an example. Healthcare, yeah, like, of course, we always need stuff for healthcare. I don't know, me personally, I'm not looking to buy a healthcare ETF. Um, but that's just me personally. Like, obviously, we have an aging society, so it's going to be needed. It's going to continue to generate higher revenues. I think probably a bit of a no-brainer, but it's not one that I'm really trying to gravitate to find an ETF in. And I think I've said it in a lot of the videos. What I as I've tried to narrow down, maybe do this exercise with yourselves. So one of my buddies, he and I, like, we talk this stuff all the time. And I said to him, pick your top 10 stocks. And he just rattled off the first, I don't know, 6 or 7, like, bam, 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 but he just knew what his top ones are. And then he kinda stalled a bit for the last 3. Now, the funny thing is since doing the exercise, he came back like 2, 3 days later with new ones of like, "Well, I can't forget to include this." Anyway, my point was, if you narrow it down, and this is what I've been working on for myself, and it's very hard to do, to the ones that you just rattle off and think of as, "Those are my favorite." Have you diversified enough that you're fine? You're going to be more volatile and have higher ups and downs. But depending on your goal, if you're trying to outperform the market, maybe it's better off to just stick to those top 6 or 7 because those are the ones you're going to be the most convicted of. So if there's a correction or if they have a pullback, you'll probably trade at the best in the sense that it's not going to scare you out because you believe in that company. And if you've done a good job at picking those companies, hopefully they outperform whether the markets go up or down. The ones I really like are the ones I talk about all the time: the Amazon, the Meta, Google. And like I said, I recently added Costco. I wish I had an actual position in it that like it was a good position. It's just I never bought it in the past, but I really do think it's one of the best companies out there. I just think it's super overvalued for where it's trading today, but I would include it in my list. I just buy less of it because I'm worried about the valuation. But I stick with mega caps and companies that I understand. That's why I said like the nuclear one is so hard for me because I don't understand the company or what they do. And Seba, thanks so much for saying that. I really like the live format. Um, i- if I was good at being organized and had a disciplined schedule, I would really do my best to try to have it consistent at the same time on the same days. It's just more that my schedule changes so much, and it's sort of the opposite of most people. I'm fortunate enough that technically I have a job, but I really work for myself. So it frees up the time during the workday when most people are stuck and have to go to the office. But the time that most people have free time, like, to me, that's family time, and generally we have something scheduled, so it's hard for me outside of typical work hours to find time. And even during the work, depending on if I have to meet with somebody or something else, it just throws off my day. But I really like the live format as well, and I like the interaction. It's super cool. So hopefully I can get a little bit better at it. My technology skills are the worst because I'm not like that old, but I'm definitely old in terms of technology. Like, I'm still in TRS-80 land or Atari. I just haven't evolved with the rest of it. I think it's all super cool, and my son shows it to me, but I'm not really that good at it. But I like the live too, and I appreciate you saying that. So the 10-year, I, I'm hoping to see, out of selfishness, lower yield, but I don't know that we will. I mean, the dead bottom was the day before Fed cut, and I think as we get towards the next meeting, when they give their, like, it really doesn't matter what they actually do. Uh, I'm assuming everybody, like, we think they're going to cut a quarter point, but it is possible they do nothing, and there's a small bet that maybe they do 50, which I thought they would just do a quarter, a quarter, a quarter from the beginning. I was surprised they did 50 basis points originally. But I also think the markets got ahead of themselves. And the reason like, I'm not on the Fed. I don't mean to question them. But the reason I thought they would do a quarter, a quarter, a quarter is nothing is breaking. They are restrictive, and a lot of people don't really understand that. If CPI is below 3 or right around 3, and they're holding the overnight lending above 5, that is super restrictive. In a lot of ways, there's no reason to do that. But that doesn't necessarily mean that the 10-year goes the same direction. And my real thought overall is that it's easy to say it now, but I thought the yield curve would uninvert and get back to normal, and you'd see the Fed start cutting rates, and people super surprised and not understanding and calling for a huge recession because it uninverts, which is always the sign of the recession coming, and all this doom and gloom, when actually it's just natural. Like, the 10-year should be predicting, like, how the economy is going to do. So if it's still giving a 4% yield or so, that's a good sign. And if the Fed's ever able to cut the front end and lower the borrowing rate for the banks to where they can profit better, well, that makes good sense. The caveat is, I think as we get to the meeting, when they give their analytics afterwards and Powell speaks, that just like when they cut more than was expected, and that was the dead low for yield, I think the opposite may be true if they do nothing or cut a quarter, and the markets might overreact the other way, and then we'll see the yield start falling off a bit, and maybe higher prices, lower yield. Uh, and I think it's a decent investment. In some ways, I think over the next 10 years, a treasury might be surprisingly okay. um, I'd start steering away from the shorter end. I would decide, do I want to own a bond or not? And am I happy with the yields? Um, I've also thought some of the high yield stocks, if they're able to continue to pay those dividends, are going to become really attractive. And I don't, if they don't have to lower as quickly as possible, and you don't see the 10-year drop all that much, you might have a longer time frame than I thought one would to be able to get into those companies and actually drive a nice big dividend check from some of those REITs and some of the, there's a few that I look at that are kind of cool. So, very long answer about the 10-year. I'm hoping after the Fed speaks that we see the yield come down a little bit, but I'm not 100% sure. It's just kind of what I think. But I don't think it's going to be dramatic, because I think part of what they're going to talk about is they are going to continue to wait for the data to make any decisions. I mean, to me, that seems like what they always say, but the data is going to be slow. It's going to take longer, and the markets are predicting that they're going to move quicker than they probably will have to. So I think that, you know the interesting thing is the tenure is more closely related to the mortgage rates, which is kind of why I say I don't really see it improving a whole ton. I think where the rates are now is probably what we'll see for a while. And I think what we're more likely to see is, if housing holds up or drops a little bit and doesn't have any big correction, that nothing will change with the 10-year, and nothing will change that much with mortgage backed securities. Will probably range trade for a while. If the housing has a real correction, I think we'd be more likely to see the Fed start supporting mortgage-backed securities and buying them in. So what I've seen is traditionally, or before COVID, there was like a 2 percentage point differential between the 10-year and a mortgage, where the mortgage rate is. It went to 3%. It's come back closer to 2%, still around 3. But if the Fed starts supporting that more market, it'll push it back to more like a 2% spread because the banks will be comfortable that they have a backstop to get out with. Um, Geo, we talked a little about the energy before. The one that I really like is Nextera Energy. Its ticker is NEE. I think a lot of them are good. I think Duke Energy, depending on what specifically you want. I'm not familiar with a whole lot of the energy ETFs. It's a great way to just kind of bundle them all, though. I'm sure your advisor or somebody could help find them. Um, I like Nextera just because they're the largest. They're out of Florida. They seem to run a good business, and I think they're great. But even Con Ed out of New York, it's like I think they run terribly, but it's probably a good investment, and they've been there forever. Like, they make some money, they pay their dividend, and it's one of those that they're not really going anywhere anytime soon. Um, so I'm 100% guilty of buying a business I don't understand, but Merck looks too cheap. Yeah, yeah. Well, and Merck, there's nothing wrong with Merck. Um, but that was how I felt. Like if I buy something I totally don't understand because I think it looks cheap, I just buy a small amount, and it's primarily to pat myself on the back if I'm right. Um, but Merck's a drug company, and I'm sure you can just pull it up and see what they do. It's a really straightforward company, and I think they're big. They're big, and they've been around a long time. Um, I'm guessing their earnings are just fine. I haven't looked at it lately. I have the ones I gravitate to. I used to have AbbVie. Getting attracted to dividend yield, which I know I shouldn't. Rotated into Pfizer and Bristol Myers and out of AbbVie. The funny thing is, I kind of like AbbVie better as a company for whatever stupid reason, but I bought it really well when it was paying a 4.5% or 5% dividend. Now it's paying closer to 3 and rotated into Pfizer and Bristol Myers because they were paying around 5%. Now, I know better and I shouldn't be so attracted to yield, but I still couldn't help myself and felt like same industry. I'd rather get the dividend checks, and I think that they're all decent companies. And no matter how much you research a company, don't beat yourself up too much on that unless you don't even know what they do. The fact is, I think a lot of people can over research a company and overthink it. And a lot of times, whatever comes out in the earnings reports and whatever that gets put out there, they're able to manipulate it enough that it's really hard to make judgments based on all of that. So we get super caught up in all the research. Uh, it's not negligent. It's from watching the markets for, I don't know, I'm 52, 40 years since I'm 12, that if you just pick a great company, it tends to work itself out. Thanks, 1970s. Like, just stick with the companies you understand and you know the business and you think that they're good at what they do. If it's overpriced or underpriced, depending on your timeline, it doesn't matter. Like if your timeline is 1 to 5 years, it kind of matters. But let's say, everybody points to Warren Buffett, and forgive me, Mr. Buffett, this is not. And like one of his investments of Coca Cola, would it really have mattered if he paid 50% more than what he paid for Coca-Cola? He's owned it for, I don't know, 30 years, and the company's done incredible over that time frame. If he paid, and I'm totally making it up, I haven't researched where he actually bought it, but if he paid $40 instead of 30 over the past 30 years, it would make no difference. It's still an incredible investment. And I would say that would be the case with a lot of companies. If you're buying whatever's still around in 30 years and they continue to grow and they continue to do well, it really doesn't matter if you buy it at $50 or 70. Yes, it feels good if you buy it at the bottom and it starts going up. But if your time horizon is 20 years or longer, this year and next year don't matter. Now, I like to trade. We were talking about Nvidia. I get caught up in it too. So that's why I have the separate accounts of the things that I try not to touch and I leave it alone. To me, like I have Starbucks in the account. I don't ever plan to touch it. I'm long from over 100. But you know what? I like Starbucks. I hated the CEO who had a bit of an arrogance and blamed the customers for why they were struggling. I'm very glad that they got Mr. Nichols in, who seems to be very good at what he does. But when it was at $70 a share or whatever it got down to, it wasn't like I was looking to get out of the company. I still think that they're really good at what they do. I'm pretty shocked when I went to Europe and saw that people actually go to Starbucks when they have all of these incredible coffee shops around, but they do. They seem to be busy anywhere. My wife is Chinese, and I didn't go, but, about 3 or 4 years ago, she went back to China, and she was sitting there texting me, telling me how crazy it is. So they have 2 of the largest Starbucks in the world, and they're across the street from each other. And she's like, there's a line literally out the door of both of them. So these two huge Starbucks, both like pretty much right next to each other, both busy as can be in other countries. To me, in time, it'll work itself out. If you have a business that does well and you hold the company for 20 or 30 years, you're going to do just fine. Now, if you're asking what's going to happen over the next 6 months, it's very hard to guess. And y- sometimes I'm right. So, like, let's use my Boeing as an example. I've been very wrong on it. I just still believe, and I could end up still being very wrong. I just think it's hard to really replace them. They have a good moat. Like it's kind of, I felt the same way about Caterpillar. I don't know that I love Caterpillar or have any big, you know, affection to the company, but every time I go past road work or I see them building a new high rise, they're using Caterpillar equipment. I think it would be very hard for another company to start competing with them, get into that industry. The cost of getting into it is so exorbitant. I think it makes it near impossible for new competitors to come along. So I think that creates a good moat. I think that creates a good investment. I don't really see it being anything exciting, but I think that that puts them in a good spot. And in 20 or 30 years, I'm hoping that they're able to have some pricing power and able to grow. But I'm glad that helped Saba. Really, I would just, if you're comfortable with what Merck does as a company and you think they're a good company, yeah, don't stress about where the price is this minute. Maybe it goes lower. Don't let that stress you. Just recognize like what you bought the stock for and what the goal is. And trying to be a short-term trader is really tough. And look, I'll give you some of the background. When I was a trader on the floor of the exchange, even though it doesn't seem like much, that bid and offer is really where the profits are and how people make money. It was very, I don't want to say it was very easy, but being on the floor of the exchange, you can see the order flow. You can see who works for what company and what they're doing. So when Morgan Stanley, Dean Witter, Goldman Sachs, and there's some other names that won't be familiar, all start doing the same thing. I didn't really need to know what was going on. I just understood that these large banks are all beginning to buy. I traded Japanese yen, are beginning to buy Japanese yen. So I would just kind of jump on to what they were doing. You don't see that on a computer screen. transitioning to short-term trading on a computer screen, I'm amazed at the guys who are profitable about it, and I think the reality is they just have an ability to continue to add on to things when they go against them, and it doesn't scare them, and eventually it works out. But I don't think you can beat the computer. Like, I think the computer algorithms are really good, and human emotion takes over. And what do they say? Less than 10% of people are profitable short term. Um, so yeah, I am cautious of a bid offer, but stocks have gone to a penny. When I first started trading stocks, the smallest spread was a 16th, which is what, 6 and a quarter cents or something. But most things traded in eighths, which is 12.5 cents wide. And most were even a quarter wide. Like, even if they were trading eighths, they were usually like whatever the dollars were and an eighth bid at 3/8 offer. And we think of that today, and that's 25 cents wide. Most stocks are, a few cents, what, like, the percentages are negligible. So that's why I think at some point it's good to transition to much longer term, be less sensitive to what the bid and the offer is, be less sensitive to the price we're paying. Because if we're holding it for 10 years, if you buy Amazon today at what, it's like 100 and it was somewhere around $187. If you paid 180 or you paid 190, if it's trading $500 in 10 years, obviously all made up, did it matter that you got the extra $10? Did it matter that you timed it well? Even though, myself included, from the day I buy it, I watch it really intently for a while, but I try not to. The more YouTubes I do, I pay more attention because I want to be able to answer intelligently and know where things are. And I also enjoy watching it. But in the long run, it's pretty negligible, the what we pay for it, if we really plan to be in for the long term. Now, if it's a short-term trade, that's all that matters, and you should only pay attention to the price and not worry about much else, and hope that your timing is right to be able to make what you're trying to make and move on to the next. I just think that I wish it wasn't as hard as I really think it is, because yeah, it'd be really nice to be able to just buy and sell stocks all the time and make zillions of dollars. I think we'd all love to. So anyway, does anybody have any other questions before I say thank you and probably call it a day? I'm running out of things to babble about for the day, so we'll probably say goodbye. I'm glad some of you showed up. It's cool. Again, I'll continue with the lives. I like the format. Even though it's a really small group, I really appreciate people showing up. I think it's super cool. You're welcome, Kevin. Glad you guys made it. And like I said, I'll stick with the lives. I'll try to give a little bit further of a notice. I've had free time during the week, so I might do more throughout the days. But part of it's also I want to go watch the market close, and I like to watch the aftermarket as well. So stay in touch, and I'll see you in the next day or two. Thanks, everyone.